Markets surge on China tariff optimism and just leaving the Fed alone. So markets rallied for 4 consecutive days to finish the week up 4.6%. Pent-up market optimism finally got released as the White House softened its tariff stance on China and gave up its feud with Fed Chair Powell. So let's recap. Monday was the only red day in the week, sharply dropping on threats from the White House to remove Powell from the Fed. The White House was angry over comments Powell made last week saying tariff policy would slow growth and increase inflation. Then Tuesday was the start of the rally, rebounding from Monday's drop. The Treasury Secretary's comments from a private investor summit were leaked and appeared to be setting the stage to de-escalate tariffs with China. Then, aftermarket, the White House came out and reiterated a lot of the same softening sentiment, as well as announcing no intention to attempt to fire Powell. This set off the green rally through the rest of the week that wouldn't be deterred. Wednesday moved higher, with markets optimistic for a China tariff deal. Then, the rally continued Thursday despite China saying there hasn't been any talks yet. Meanwhile, multiple companies reporting earnings warned of tariff impact and a slowdown in consumer spending. Finally, Friday rallied further as consumer sentiment inched up from the preliminary reading. The final April consumer sentiment reading fell 8% from March. However, it did show some improvement from the mid-month preliminary reading, trough. It also showed 12-month inflation expectations sharply up from March, but slightly falling from the mid-month estimate again. So what's next? Well, a lot more earnings next week. We expect more lowered outlooks on slowing demand. However, as seen this week, markets are likely looking past that. We'll see if there's any hangover from the market's euphoria this week. As we discussed in our last video, the big question is, can the US work out the tariff deals, especially China's, before consumers notice? 3 things we're monitoring. First, the consumer. We'll have backwards-looking April confidence data next week, but we'll be more interested for mid-May readings later in the month. Second, layoffs. Companies are likely being overly conservative with outlooks, but cost-cutting actions may be more telling for how they're really feeling longer term. And finally, a China tariff deal. The US is in negotiations with multiple countries, but none are as high stakes and impactful as China. Since Monday, markets have surged over 7% solely on the White House saying it wants the deal. However, we haven't seen any indication yet that China is engaging, yet the clock is already ticking. I guess we'll see what next week brings.